Hello there, world. Welcome back to my channel. If you're new here, I'm Joe, a licensed certified public accountant with over 10 years' experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Today, we're diving into a business term you might have heard, but maybe you aren't quite sure about: cost of goods sold, or COGS. If you run a business that sells products, understanding cost of goods sold is a super important because it affects how much money you really make. No accounting jargons here, just simple explanations anyone can follow. Let's get started. Don't forget to hit that subscribe button and turn on all notifications for more video updates. And don't forget to check out our blog site where we post every Monday, Wednesday, and Friday. So we're continuing through our fourth quarter financial statement breakdown. Last week we went over the profit and loss statement. And now, taking a piece of that, we're looking at our cost of goods sold, which is a part of our profit and loss statement, and we're going to break it down a little more. So, what is the cost of goods sold? Cost of goods sold is basically the direct cost involved in making or buying the product you sell. This includes things like material you use, the cost of buying finished products to resell, and sometimes labor costs directly tied to production. So if you sell a product, some of the things, for an example, let's say you're a candle business. Your cost of goods sold might include the wax, wicks, fragrance oils, glass jars or containers, packaging, labor for making the candles, and shipping to your warehouse. So what is not included in your cost of goods and should be expensed as an expense instead? Your marketing costs, website fees, or your office rent. Those are the overhead and not direct product costs. Let's look at another example. Let's say you run a hair salon. What will be included in your cost of goods sold? You might include your shampoo and conditioner, hair color or treatment products, towels and gloves, wages for stylists if paid per service. And let's think about what is not included in that cost of goods. Does rent for the salon, the receptionist salary, or business insurance? Think of cost of goods sold as the money you spent just to get your products ready to sell. So, why should you care about the cost of goods sold? Because it helps you to figure out your gross profit. Gross profit is what's left after you subtract your cost of goods sold from your sales revenue. It shows how much money you're making just from selling your product before paying other expenses like rent or marketing. So remember, how does knowing your cost of goods sold help you out? It helps you to price your product properly. If you don't know your cost of goods sold, you might underprice and lose money without even realizing it. It shows your true profit. Your gross profit is revenues minus cost of goods sold, which gives you your gross profit. This tells you how much money you're really making before expenses like rent or marketing. And it helps to lower your taxes. Cost of goods sold is a deductible expense on your tax return. The higher your cost of goods, the lower your taxable income. If your cost of goods sold is too high, you risk profit shrink. If you low, you keep more money. Alrighty, let's take a look at another example. Let's say you are a handmade jeweler. All right, your cost of goods sold is going to include the beads, the wire, the clasp, and the time spent making each piece. Now, let's say you're a baker. Your cost of goods is going to cover flour, sugar, eggs, and any baking supplies. And if you're a resell electronics, your cost of goods is what you paid to buy the gadgets from suppliers. Things like rent, utilities, office supplies, or advertising usually don't count as cost of goods sold. These go under other expenses. Now, I know we seem like we're repeating the same stuff, but it's really, really imperative that you understand how to separate your expenses to know what is your cost of goods and what is your actual expenses. So that's why it seems like we're harping on the same stuff over and over to give you guys a good understanding. Even for accountants, cost of goods sold is a separate type of accounting, which we call manufacturing accounting. So let's look at some more examples to help you really understand what cost of goods sold means. Let's say you're a handmade jeweler. Your cost of goods sold will include the cost of beads, the wire, the clasp, and the time spent making each piece. Now, let's say you're a baker. Your cost of goods are going to cover the flour, sugar, eggs, and any baking supplies. Now, let's say you're a resale electronics. Your cost of goods sold is what you paid to buy the gadgets from suppliers. Remember, things like rent, utility, office supplies, or advertising usually don't count as cost of goods sold. Those go under other expenses. I know it seems like we're probably harping on the same stuff over and over, but we just want to make sure you have a great understanding of what is included in that cost of goods sold and its separation between cost of goods sold and other expenses. We don't want to cross the two and combine the two because then we're going to make a big ball of mess, and it's going to cost us more money to get that fixed than it will if we do it correct the first couple times. Because remember, cost of goods sold, this is a even in accounting, this can be a little bit tough to decipher and to do. There's a whole different segment of accounting that talks about just cost of goods sold, and those are what we call cost accountants, and they make a lot of money, and all they do all day is just figure out the cost of goods sold for companies and help them out with that, and that's called cost accountants. Alrighty, so here's a big question: how do we actually calculate our cost of goods sold? It is a simple formula to calculate it for a period. So what we're going to do is we're going to take our beginning inventory. We'll add our purchases during that period, and we're going to subtract out our ending inventory. And this is going to give us our cost of goods sold. In simple terms, start with what you had at the beginning, add what you bought or made, and then subtract what's left unsold at the end. Alrighty, let's look at this example of how to calculate your cost of goods sold. All right, let's say you start the month with $1,000 in products. And then during that same period, you buy or you make $2,000 more during the month. And then your ending inventory of the stuff that you didn't sell is $500 in inventory. So your cost of goods sold is going to be um, our beginning inventory of $1,000 plus what we purchased during the period, which is $2,000 more, minus our ending inventory, the things that were left unsold, the 500. So that gives us a cost of goods sold of $2,500. That means that you spent $2,500 on the products you actually sold. And this will help you to know the cost of products you actually sold during that time. So, what are some good tips for managing your cost of goods sold? Now, if you're able to manage your cost of goods sold, this can really help your business to grow. Here are some simple tips. Shop around for the best prices on materials. Keep track of your inventory carefully. Look for ways to make production more efficient, and review regularly your costs to spot changes or opportunities to save. So, to sum it all up, cost of goods sold is all about the direct cost of making or buying the product you sell. So, what is the cost of goods sold and why does it matter? It shows your true gross profit. Remember, we're going to take the sales revenue minus our cost of goods sold, now to give us our gross profit. It's going to help us with pricing. You need to earn more than your cost of goods sold to stay in business. So that just means that we need to set our prices higher than our costs to make sure that we're breaking even and creating a profit. It's tax deductible. Remember, it can reduce what you owe at tax time, and it needs to be tracked. Inventory and supply are records are key to your success in your business. If you don't understand what you have on hand and what you need and how much to track it, then you're probably going to not succeed in business. Thank you so much for joining me. If this video helped you understand cost of goods sold better, please hit the like button and share with your fellow business owners. Join me next week to talk about bookkeeping best practices. Don't forget to hit that subscribe button and turn on all notifications. And be sure to check out our blog site where we post every Monday, Wednesday, and Friday.